Economy appears to have recovered faster than most economists and professional bodies expected from the COVID-19 related lockdown. The country's GDP contracted by only 7.5% in the second quarter, according to latest numbers from the National Statistical Organization. This is a sharp improvement from the 23.9% contraction in the first quarter. It's also much better than the 8.9% figure that CNBC TV 18 got from a poll of economists. However, the economic contraction for the second straight quarter also means that technically India is in a recession. The big surprise in the numbers came from manufacturing, which clocked a 0.6% growth during the quarter versus a contraction of 10% in the first quarter. Agriculture, of course, did as well as it did in the first quarter, growing at about 3.5%. But to discuss the numbers and what it portends for the full year, I have with me a very eminent panel of economists and statisticians. Joining me is former chief statistician and former chairman of the Statistics Commission, Dr. Pranab Sen, former member of the National Statistical Commission, Sudipta Mundal, and Abhishek Upadhyay, senior economist at ICICI Securities PD. Gentlemen, thank you very much for joining me. Dr. Sen, let me start with you. There is a proviso mentioned that because of the lockdown and restrictions on movement, some data sources such as GST interactions with professional bodies were also referred to for corroborative evidence, and these were clearly limited. Estimates are therefore likely to undergo revisions because of the aforesaid causes. Do you think data could have been extremely limited and therefore this number is subject to change?
Well, this, Lata, has happened now. It happened in the first quarter as well. Of course, the data is limited. A lot of units have not reported and they're tardy in responding. The quarterly returns that are to be filed with SEBI have not all been filed. So all of that has happened, and corroborative evidence should have been resorted to. The GST data is a good way of doing it. In any case, the NSO used to use the GST data for the trade sector. Now, I guess they're also using it to estimate what's happening to other sectors as well. But that's an approximation. It doesn't really substitute for balance sheet data. Having said that, the real question is that is this better or worse than the data set that we had in the first quarter? And I suspect that it's somewhat better.
Yes. Okay, I'll come to the other confusion that I have. And let me ask Dr. Mundal that. Dr. Mundal, thank you for joining. The press release itself says that the second quarter manufacturing, according to the IIP, is minus 6.8. That is paragraph 8 of the press release. But the final number for GDP is plus 0.6 manufacturing. Has this to be reconciled entirely because firms have cut their expenses and their EBITDA is high? Does that account for this huge difference?
First of all, Lata, I am not in a position to give you a very robust answer to that. Maybe Pranab has a better idea on this. But, the IIP data is, as you know, just for the organized sector. Yeah. Whereas the data for manufacturing in the GDP numbers or the gross value added, it, of course, for the unorganized sector, it doesn't have direct estimates, it does some proxies and so on. And it's also used other indicators, like we were just talking about GST. We know that there's been a very sharp rise and increase in GST collection and so on. So the database, I think, that has gone into the construction of the manufacturing gross value added estimate in these numbers that have come today are much broader, I think, than just the IIP numbers. That would be my take. But I don't know, maybe Pranab has been an insider in the statistics department, so he may have a better view on this.
I want to come to him, but let me come to Abhishek also. Abhishek, this is the most intriguing part. they tell you in the press release that these are the data we have used, and in the data they say IIP mining in the second quarter was minus 7.1 and manufacturing was minus 6.8, and yet when you come to the actual GDP number, mining remains at minus 9.1, but manufacturing goes to plus 0.6. Is this to be explained entirely by the listed companies' EBITDA coming hugely positive?
Hi, Lata. So typically what they do is that for roughly about 25% of manufacturing GVA, they use IIP. They use it as an approximation for what is happening on the unorganized part of the economy. Not really a great way to do it, but that is what they do. So 3/4 of manufacturing GVA is derived from what is happening to corporate basically profitability. And as you mentioned, because companies have undertaken sharp cost reductions, that would have definitely played a big role. Now, of course, what we know is that in the first quarter, there was some delay in corporate filings. I don't know. In the second quarter, there should have been better data. So I am presuming, as Dr. Pranav mentioned earlier, the data quality is still, still more robust compared to the first quarter. And it is this better corporate profits, we can debate whether this is sustainable or not, but that is what is basically driving the surprise that we have seen on the manufacturing side.
Of course, we are going to debate whether it is sustainable or not. But Dr. Pranav said, I just want this confusion out. When you do IIP, we take the top line, correct? Volume. Whereas when you take GDP, because it is GVA, we are taking value added, and value added is higher because costs are lower. Is that the only explanation for the huge difference in that manufacturing number?
No. Lata, let me take you back to Econ 101.
Okay.
Remember, the IIP captures the volume in all manufacturing, including intermediates.
Yes.
Right?
Yes.
So there is a compositional effect that is also playing out here.
Okay.
So what this is suggesting, other than the point Abhishek made, which is a very important point, which is that the bulk of the manufacturing estimate is actually coming from balance sheet data. That is the corporate part of it. And but just to explain the nature of the discrepancy, is that what you really need to look at is the IIP for the final products, which is consumer goods and capital goods, right? The EBITDA part of it is a little dicey. I mean, you should, just because the EBITDA has gone up doesn't necessarily mean that the value added has gone up, because the value added is EBITDA plus your wage bill. And in most corporates, the wage bill has actually come down very sharply. So the net effect is not that great. So I don't think that really explains it. I think it's principally a compositional effect.
A composition effect.
What is being picked up is that the growth in the consumer-facing sectors have really been very good. And that we know.
Yes.
Because consumer demand did come back, and the whole festive season and pent-up demand effect was very much out there in evidence.
Okay, so more of consumption has been picked up, and that is why the manufacturing IIP, manufacturing GDP looks better than the manufacturing IIP. It is what you are picking up. Is that right, Dr. Sen?
Yes, that's correct.
Okay. Okay, well, now let me come to extrapolation from here on. But Dr. Sen, how much, this is a fairly good number from minus 24% in the first quarter to have come to minus 7.5%. Can we therefore say that we are very close to coming to growth itself by the fourth quarter?
No. In fact, this number is a little worse than what I had expected. I had expected around -5. And my projection for the third quarter is worse than for the second quarter.
Can you say what it is?
It's -8.
Okay, but why would this one be? I mean, clearly the economy is going to be more active in October, November, December than it was in July, August, September. So I'm confused.
No. You see, what happened is that the stocking up for the festival season, remember, we are picking up production and not sale.
Okay.
The stocking up for the festive season begins usually around May.
Okay.
Right? that didn't happen, and it began really somewhere around July. So there was a huge concentration that took place on the production side. But once the festival season is off, and remember, there's 1.5 months left to go after the festival season is over. In the third quarter, all of this is going to drop off. It happens every year. And it's going to drop off quite sharply.
All right. Okay. So what would your full year estimate be as of now, Dr. Sen?
As of now, I will continue with my minus 12%.
Minus 12. Okay.
Yeah.
Dr. Mundal, yours, you were expecting the contraction to continue up a little bit even into FY22. So now do today's numbers change things for you?
Yeah, certainly we will have to revise our, recalibrate our forecast based on these numbers that have now come in. I still think we will end the year negative. Maybe now not as much as Pranav was saying, because our earlier forecasts were, minus nearly 13%. That I think we will probably have to substantially revise downwards. But I still think we will end the year negative territory. Possible now, we have, these numbers have just come, we have to rework our forecasts and so on, but it's possible now. My judgment is that we might end up, getting into positive growth by 21-22.
Okay. By earlier than...
Not 22-23 as we have been seeing.
Thought. Okay, you will see growth in next year itself, next financial year. Okay, actually, Abhishek had a number of, I think, -7 for the current year. And even for Q2, their numbers come pretty close. I think you were at 7.7. So, Abhishek, you don't need to revise your numbers?
You're right, Lata. So, broadly in sync, as you said, the details, manufacturing has surprised, and we need to, again, have a look at, how numbers will pan out in the second half. But our broad thinking is that we should come to more or less flat growth, potentially in the third quarter and some growth in the fourth quarter. And the key reason is that in the July-September numbers, if you look at the high frequency data, July and August generally was weak, right? It is only towards the latter half of August and towards September did you start seeing those positive economic surprises. Data that we have for October is somewhat mixed. So some data like rail freight or even GST, e-way bills, etc., it has softened somewhat. But our sense again is that even as risk is that what Dr. Sen mentioned earlier, that demand certainly tapers off once the festive season gets over. But I think the data is somewhat mixed. The GST collection numbers that we got, that we haven't yet received, but what we hear is short point. Do you stay at 7 or you will change it? We will be at 7. We will be at 7. Yeah.
All right, but I'm going to raise precisely those questions. The UPI says check bouncing continues. The core sector data which came today for October was actually worse than the September data. And there is a fear that, firms have cut costs. Informal sector has lost jobs, according to the CMI. And therefore, are we going to see a much better second half or not all that good? That question after the break. Back, the second quarter GDP numbers have been announced and they indicate that the economy didn't do all that badly as economists feared. The contraction is 7.5% compared to 24% in the first quarter. The CNBC TV18 poll had expected a contraction of close to 9%. So this is a little benign. We have been speaking with former Chief Statistician and economist Dr. Pranav Sen, former member of the National Statistical Commission, Dr. Sudipta Mundal, and economist from ICICI Securities, PD Abhishek Upadhyay. Now the GDP and what it means to the informal sector. Dr. Sen, that question. When the final numbers come, the informal sector will have to be calculated. Is it likely that the GDP numbers will be revised lower?
I'm not even sure they'll have the data for the informal sector for this period. They will have to do a bit of interpolation to get that. So I don't think you're going to see any major revision because the informal sector surveys are simply on hold at the moment. So I don't think we'll be getting any data on the informal sector till probably next year.
Okay. No, I'm just wondering how this factor will be factored into the economic growth. The fact that the formal sector appears to have eaten up a lot of the market share of the informal sector. I mean, to put it very crudely, we are eating more biscuits and noodles because we can't eat chaat and street food. So a lot of jobs must have been lost in the informal sector. How at all will the GDP account for it, Dr. Sen?
Well, as I said, unfortunately, we may not be able to account for it properly at all. The only hope that we have is to be able to assess some of that in the employment data.
Okay.
And much is going to depend upon how effectively the employment data is used.
Okay.
There is no other way of measuring what's happening in the informal sector.
Okay.
But I tend to agree with you that the informal sector has been hit much worse than these numbers suggest.
Okay. Dr. Mundal, will this have a backlash in terms of demand, or does the demand of that sector doesn't even count? So many people who would have lost jobs will not be buying soaps and shampoos.
Certainly I think the numbers they were looking at are, how should I say, biased in favor of the organized sector, because the informal sector is not captured properly, and use all kinds of proxies which are one way or the another linked to the organized sector. So the official numbers that we see always tend to overestimate growth or underestimate a contraction in a period when the contraction has been, from all indicators that we have, has been much sharper for the informal sector.
Okay.
So, and that error, I think, will remain in the official. We just have to take it on board.
Okay.
But having said that,
no, will it have a backlash of demand? Is what I'm saying.
Well, whatever backlash it has already showing up in this, the data will still underrepresent because you're seeing the consumption expenditure data, which has fallen by about 11%. That already factors in, the backlash, as you're saying, of lost income in the informal sector. But it's underestimating that backlash also.
Okay.
But having said that, I do want to emphasize that the CMI employment data is very important for us to get some handle, as I think Pranab was saying. If you look at the overall numbers, the unemployment rate is no worse now than before the lockdown.
Okay.
But the composition has changed very significantly. A lot of this increase in employment are make work type of Manrega type jobs, the unorganized sector and so on. And the organized sector jobs actually have gone down.
Yes.
So I hope the statistical office will try to factor all that in
the revised estimates.
Rework the numbers.
Okay. Well, now to come to the last element in the public administration, defense and other services. What government spends: minus 12.2 for second quarter and minus 10.3 in the first quarter. Abhishek, does this mean that government has a little more leeway to spend in the second half, and therefore there can be a fiscal growth multiplier?
Right, Lata. So in the Q2 numbers as well, government final consumption expenditure was down more than 20% YOY, and after a reasonably strong Q1. So definitely government spending lost some steam.
Yes.
We do think that therefore there is that scope for it to recover. So if you look at, for instance, the cash surplus that central government has currently, it is in excess of 3 lakh crores. So that itself tells you that a lot of the spending which should have happened earlier, but it may take place towards the second half of the year. The only caveat I will add here is that a lot of the fiscal stimulus this year was in the form of transfer payments, that is subsidies and welfare schemes, right? So a lot of that would not be counted in the growth numbers.
Okay, in GDP, that's right.
So we should be cautious in terms of how much boost government spending could provide to H2. And lastly, state governments, even as they enjoy a much larger fiscal deficit this year, still they would need to cut spending. So government spending could be positive and could be a tailwind in second half, but not very significantly.
Okay. Well, similar question to you, Dr. Sen. Government numbers are coming negative. If the government could find some leeway could the government in the first place get leeway to spend, and can that be pro-growth?
Well, clearly the government does have the leeway to spend, but I completely agree with Abhishek, which is that what you should expect is that in H2, state government expenditures will go down because they're starting to run out of money,
Money.
including with the expanded borrowing program.
Okay.
Right?
Yeah.
So on one hand, we are looking at a degrowth in the state expenditures, and at best, it can be compensated partially by the center if it expands its expenditure program.
Okay.
But the point that Abhishek was making, I think, should be taken seriously, which is that the nature of expenditure matters a lot.
Oh, yeah.
Okay. Generally, the state government expenditures do tend to have a somewhat higher multiplier, because if it's only transfers that are going from the center, then the multipliers are going to be much lower.
Much lower, yeah. We got the fiscal numbers, April-October capex, and that is at 1.97 lakh crore compared to 2 lakh crore last year, 2.01 lakh crore last year. So already it's about only about 4% less than last year. The government clearly has spent less on capex, at least up until October. Dr. Mundal, final thoughts. Do you think the government can make a difference? If yes, with what policy?
Yeah, as Abhishek mentioned, in fact, just back of the envelope calculation, government consumption expenditure is down 22% in Q2.
Yes.
Now, this is despite the fact that they have actually announced a very substantial borrowing program. If you combine the planned deficit, that is post-budget, extra budget borrowing, extra headroom given to states and so on, all that adds up to something like 15% of GDP.
Okay.
That is already on the cards, as it were. Now, most of that has not yet been done. It will happen in H2, and that will get reflected. But I'm not sure we have too much room to push the envelope in terms of further additional borrowing beyond that 15%, given that the RBI has also done a lot of stimulating money supply and liquidity and so on. But I think the unused part of this borrowing program, which is to come in H2, will hopefully reduce a lot of this contraction we're seeing in the government expense, because that to me is really the most negative part of what we are seeing.
Yes.
The positive, on the other hand, is that investment contraction is
not
reduced
bad. Yes.
considerably.
Yes.
Even as a percent of GDP, it is actually higher now compared to earlier.
Yes.
So that, and also the exports.
Yes.
So the two main autonomous drivers of growth, apart from government, it's government and exports and net exports, net of import, which is now positive, and investment. Really, the news is not too bad on that, because the government spending has gone down, but there's available headroom within already what has been announced for H2.
That's a great wrap, sir. The positive for the second half could be that the government has a little more room to spend, but it'll depend on whether they spend on plain transfers which don't add to value addition, or whether they give it to the states and indulge in the planned capex. The positives could also come from gross fixed capital formation, which actually has not contracted much, contracted by only 7%, and exports, which are actually doing very well. These could be growth kickers, but the negative could be perhaps the economy has already stocked up a lot and there could be a slowdown in the third quarter and the fourth quarter. Well, but it is still good news that exports and the second quarter GDP itself has not contracted much. With that, we wrap up on this edition. Dr. Sen, Mr. Mundal, Dr. Mundal and Abhishek, thank you very much for joining us.